What's up everybody? Welcome to the Stocks channel. My name is Cory and today in the stock market we saw a strong bounce across the board off of critical support. Can this bounce be the beginning of a possible Santa Claus rally? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, I don't feel like talking, so we're gonna move quick today. So we see SPY was up 1.78% today, and we did close back above that 20 simple moving average, and we did have a gap up open, and we did get a gap and go. So when you get a gap up and you still close at the high of the day, that's always going to be extremely bullish because it shows impulsive price action. So don't rule out the possibility this just started the Santa Claus rally, even though technically the Santa Claus rally isn't until next week and the first few days of January. So right now with the price action back above this 20 simple moving average, which is right around 463, we're very close to regaining the full bull trend. So right now, watch that support level right around 463, 462, and the 50 EMA at 459. As long as we're staying above SPY 450, remember that we're still in a macro level bull market, so don't confuse it any other way. SPY above 450 is still bullish, and SPY below 450 is definitely looking like we're going to get a full-blown correction, which means SPY could be coming all the way back down to 436. It's really that simple, so don't overcomplicate it. And don't forget that SPY has not gone anywhere for about 2 months now, so eventually when we break out above 470 or below 450, it's going to be a very impulsive move. So above 470, we're getting a very bullish move to new all-time highs, and below 450, we're getting that full-blown correction all the way down to SPY 436 or lower. So watch critical resistance above right around 465, which will be the gap close, and that 470 level, and back above 470, you're looking for the price target at 477. On the triple Qs, we were up 2.24% today, and the triple Qs are back over the 50 EMA on a close back above 387. Now the triple Qs still look a lot weaker than the rest of the market because we're still below the 20 simple moving average. We need to see the triple Qs breaking above resistance at 392 and breaking out of our resistance trend line right around 395 to 396. If we can get the triple Qs back above the resistance trend line, we should start back into another bull cycle, which means we should break back out above 401 and hit those new price targets at 410 and 415. However, if we break down and we lose this critical support at 379, we could be coming all the way back down to our support trend line in the low 370s. And if we lose support at the trend line, we could come back down to close the gap at 360. So your line in the sand at support is going to be right around 372 on the triple Qs, and your resistance breakout level is right around 395. Everything else is still a choppy market with no trend for the bears or the bulls. So watch these support levels at 383, 379, and 374, and resistance will be at 392 and 395. On the Dow Jones, we were up 1.61% today, and we see we're very close to regaining the full bull trend in the Dow Jones. We need to see price action breaking out back above 356, and we need to close the gap at 358, with the most critical support levels right here at 353 and 351. If we break down below 351, we're very likely coming back down to 349, and if we break below that level, you're looking for 344 and 341. However, you can clearly see we're getting very close to going back into the full bull trend, and we did get very impulsive price action today. So on the breakout in the Dow Jones back above 360 to 361, we'll very likely see those new all-time highs, which is taking the Dow Jones all the way up to about 372, with resistance at the previous all-time high at 365. In the Russell 2000, we did gap up today, going up 2.86%, and we're very close to testing that resistance trend line. Remember, the Russell 2000 is definitely in a bear trend, which means we're very close to going into that full-blown bear market, but we need to see the Russell 2000 breaking and staying below 213 to see the full-blown bear market. Right now, this is more than likely just a bearish relief rally with resistance right around 219, 223.7, and then of course the gap close up here at 228. If the Russell 2000 cannot break back above 232 and or 234, then this is all just going to be a bearish relief rally and we're going down for another leg lower, which will take out these lows and we'll see much lower prices. However, if we can get back above 232 and 234 at any point, it will start looking like a bull rally that could take the Russell 2000 to new all-time highs. So there is a very strong support level down here right around 213, and the gap close is also in that same zone. And if we lose that support, you're looking for 207 and 205. On ARKK, we were up 3.84% today, and we did see ARKK finally breaking out above the resistance trendline, which means ARKK could be finally seeing this bearish relief rally. Remember, ARKK is just a bearish relief rally as long as we're below the 50 EMA, which is right around 107. So you can't get bullish just because we're going higher when you're coming out of a strong bear trend. It's more than likely just going to be a counter trend move before we see more legs lower. However, that's not the case if we can break out above 107 and stay above that level and get a decisive breakout back above about 119. That's a long way in the future to see that price action. So right now you're looking for a short-term bounce that can take ARKK back up to 103 or 107, but you're still looking for the possibility that price action will reject off those levels and we'll still try to make another attempt at another leg lower, which is down here at support at $85. Remember, there's still a possibility this is a double bottom, so we still have strong support at $90. On the VIX, we were down just over 8% today, and we see the VIX closed at 21. Remember, if the VIX closes back down below 20, that is more than likely going to confirm that we are getting the bullish Santa Claus rally, but as long as the VIX is above 20, you still need to be cautious. The full-blown correction is on the VIX closing back above 25, so right now we're still in that chop zone with the VIX above 20, with the line in the sand on a bull rally below the VIX level of 20, and a full-blown correction on a VIX level above 25. On Bitcoin, we're currently up 3.8%, and we do see Bitcoin starting to look relatively bullish, but we still need to break out of this resistance trend line, and we need to see Bitcoin breaking out above 50,000. Above 50,000, we're starting to get a lot more bullish that this was a potential bottom, and on the decisive breakout above the 50 EMA at 53,000, we're going to see confirmation that we're likely going into another bull trend. So watch the resistance at 50,000 and 53,000 with very critical support right around 45,000 and 42,000. If at any point we lose critical support at 39,000, we're more than likely going to see Bitcoin going into a prolonged bear market. But right now, for all we know, this was the bottom, but we're waiting for that decisive bullish breakout to confirm that we have hit a bottom and we're ready to go much higher. On Amazon stock, we were up 2% today, and we did close over that resistance at 3,400, so that was a bullish price action close. You can see we're still above the 50 EMA, so you still need to be cautious, and you can start getting a lot more bullish if we can get back above this support trend line right around 3,460. Above that trend line, we're starting to look more bullish, and a resistance trend line breakout back above 35.46 will be the bullish breakout, which means we could see Amazon going back into the 3,700s. If at any point we lose 3,400 as support, remember we could be coming back down to 33.11, and if we lose 33.11, we could be coming back down to 32.40 or 31.85. On Tesla stock, we were up 4.29% today, and we did bounce off of that support at $900. Remember, on a close below 900 or price action breaking down below that level, we're very likely going to close the gap, which is our next support level at 843. Right now, it's more than likely we're bouncing back up to test resistance at the 50 EMA, so look for strong resistance right around $985 to $1,000. Above 1,000, we're starting to get a lot more bullish, and the resistance trendline breakout will be back above 1,100. So right now, Tesla is still looking bearish, but it does look like we're getting a bounce off support, so watch those critical resistance levels for a possible bullish breakout. On Apple stock, we were up 1.91% today, and the price action's back above all the moving averages, and we still have that very strong bull trend. Remember, Apple's price target is still up there at 188 as long as we have the bull trend, but we will need a price action breakout back above resistance at 176 and 179. Back above 179 should be a quick trip to 188, and then I think we could see Apple going through a full-blown correction, which could take us out to earnings seasons next year. So right now, there's still a bullish outlook in the stock market as long as Apple is looking bullish, because Apple is a market-moving stock. Watch those support levels at 170 and the 20 simple moving average at 169. And remember, if we start breaking down below about 169 to 168, we could be coming back down to 162 to 160. On the financial sector, we were up just over 2% today, and we still see price action closing below all the moving averages, but we did get a very bullish looking candle on a gap up and run open. So right now, the financial sector is still in a bear trend, but the price action could break that by closing back above the 50 EMA, so watch that very critical level. You can clearly see the financial sector is looking like it's consolidating, and it still looks like yesterday's price action could have been a false breakdown. The industrial sector was up about 2% today, but we still see the bear trend in the price action below all the moving averages, so it's way too soon to say it's looking bullish. We did get the gap up and the run closing near the high of the day, but we need to get back over that 50 EMA to reverse the bear trend. The healthcare sector was up 0.42% today, and we still see price action above all the moving averages, and we still have the strong bull trend, so the healthcare sector is still looking very bullish. The energy sector was up 2.85% today, but we still have bearish trending, and we still have price action below all the moving averages. So just like the financials and the industrials, we need to see the price action getting back over that 50 EMA. So jumping back over the S&P 500, you can definitely see this is still a choppy market that's just going sideways, and it's really just a choppy market riddled with bear traps and bull traps alike. That's what you should expect when you don't have a bear trend or a bull trend on the daily chart, and you can see we don't have a trend in either direction. We're very close to either breaking down and seeing the full-blown correction, or breaking out and seeing the Santa Claus rally, so watch those very critical levels I gave you and watch the price action accordingly. Also, don't forget I have bank trade alerts, which only trades the ETF TQQ, and you get all of your buy and sell alerts directly via email and text message. Bank trade alerts is doing very well in this volatile market, so if you're looking for a trade alert service, you can find out how to join bank trade alerts and all of the details by clicking on the link in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link in the description. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.